Hello, this is Pat Walker at MissionWinners.com, and I am making a video for Brett. Brett, welcome to the team. I'm glad you're here. By the way, I apologize if it took a little time to get to you. I've had a ton of different things going on project-wise, and I'm not trying to be evasive. It's just that between everything we're doing right now, it gets a little hectic just putting a key list together, running the screens and putting the list together and key list together. It takes a long time. In fact, it takes hours. But I'm not complaining. I love it. So let's answer some of your questions here, and I'm glad you asked these questions, and I thank you. Do you have all your trading and investing rules written down? And if so, would you mind sharing? Yes, I have them written down. I have them in a couple of different, believe it or not, a couple of different pages. But what I do here, and it makes it simple, if you just follow me for just a little bit, you're going to constantly be hearing my rules every day on what I'm doing. If you are in the VIP feed, I am constantly talking about what I'm doing and why I'm doing what I'm doing. And so those rules are all there. But the positive news is this. Yes, these rules are all going to be laid out. Where they're going to be laid out? They're going to be laid out in a book that will be coming out that explains in depth the approach, the mechanics of it, step by step with no stone unturned. Here's the next question. Would you be willing to make some longer videos who are wanting to hear more of your personal trading journey? Yeah, you bet. But you know what? I'm real careful with that, and I'll tell you why. I don't want to bore people, I guess. All right? It's just a thing. It's like after a while, people get tired. It's like, I'm tired of hearing about this guy. And I respect that completely. So, yes, but would I do that? You're darn right I would. I'll tell you something right now, though. I started doing this in 1986. Most people don't know this, but there's a reason why I got so serious about this. I was 29 years old when my dad died. We were very close. He owned a hardware store. My mom had the business. She sold the business and gave me a portion of that money to invest. And I realized right then and there, I have to get very serious about this. I cannot just be your average broker buying and selling a bunch of crap. So I had to get good. In 1986, I started tearing into this doing research. In 87, I did more, and I made it a point. You talk about a personal trading journey. I made it a point to meet and talk with great investors. I maneuvered myself into meeting Martin Zweig, and if you don't know who he is, Google him, Zweig. Meeting him and talking with him face to face twice. I have sat down at dinner, once at dinner lunch, with Bill O'Neill twice. I made it a point to talk with him. I made it a point to talk with Ed Seykota. And it's not because I'm a leech or a sponge. I want to learn from people. I don't have an ego with this. The market's bigger than any of us. I do not believe in reinventing the wheel. I want to learn from people and then study the market and learn from the market. That would be what I'm after. Here we go. With your education background, would you be willing to produce some extra credit type videos with all the gory details so that those, yeah, there you go. Oh yeah, buddy, I could make some gory videos. I'll tell you this right now, and this is for all of you. Years ago, a good partner of mine was trading my account. I was up in the mountains in South Dakota, and this was before the days of the internet, before good telephones. I was out there pretty much incognito and near the Black Hills, and I didn't know this, but he was trading my account, and I came back, and I had lost almost $200,000, which at that time was about 1/3 of the account. And I still remember coming home and sitting at my desk, and it was 1990, I think it was like 1993. And I sat at my desk and I cried. I was like, I couldn't believe, and he didn't tell me it happened. He argued with the market, and that really, really hurt me. And we're still good friends, but I learned something. I learned that I have to really master it better and not argue with the markets like he did. and we basically don't trade together. So we'll leave it at that, okay? Here's the next question. How far up in price will you chase a breakout? Sir, I will tell you this. I will chase maybe on lower price stock, 20 cents, 30 cents. That's it. I don't chase breakouts. Why? I've seen too many instances that when you chase, the thing reverses down and you get kicked. I want to buy it at the right spot, and if not, I ain't going to do it. I don't believe in chasing, because chasing is emotion, and emotions and good investing don't mix. That's why I'm very, very stringent on my entry prices, which by default does something great. It keeps our losses much smaller. And where we have losses, yeah, anybody who says you don't have losses is a liar. Yeah, we have losses. It's part of the deal, but you got to keep them small. By the way, Bill O'Neill talks about 5 to 7%, but he also says he wants to keep his losses much smaller than that. And I do too. I want a super clean entry, because if it's a super clean entry going across these tops right here, all right, I know that this lifts off. If this falls back down into here, into this bar, which was not a great bar, we didn't buy this, or we didn't have to because we're in it already. If we had, guess what? If this starts to go and then reverses down and starts slipping into this bar, I'm selling some of this. The high on this bar is 86.13. Let's suppose we bought it for 86.20. If this stock's starting to trade around 85.80 and I'm down 30 or 40 cents, it shouldn't do that, and I'm probably going to sell some off. I run it that tight. Which leads to another point, sir, and for everybody, I don't day trade. I'm not sitting here looking at 5-minute charts trying to do a bunch of in and out stuff. I want it to work. That's why I focus on daily, hourly, 30-minute charts. It makes it easier. Next question. How do stocks go from your scans to your key list? Great question. What is your criteria for key list stocks? Here's the foundation. I focus on really clean and simple bases. You hear me say that a lot in the videos and in the text format. I want really clean and simple bases. Why? Because if I have a clean and simple entry, I have a very, very specific clean and simple exit that will allow me to get out much faster with much smaller loss. And yes, do you have losses? I'll say it again, yeah. Like here's Alibaba, all right? We bought this here. Remember that? We bought this and it started to go up, and when it started to do this, we took it out for a small loss. Did we lose? Yes, we did. And you can say, boy, that was stupid because it came back up. You know what that's called? That's called investing through the rearview mirror. I have to live in the now. When I see this kind of action, that's bad. When I see this, that's bad. Does this? They're not supposed to do that. Starts to take off. I'm able to get back in with a clear head. You can say, again, well, gosh, if we hang on to it, look what happened. When it's doing this, I don't know the future. I live in the now. So that makes it much less stressful, which leads to a very important point. Stress, high emotions are the entities that undermine our trading success. So I do everything I can to minimize high emotions. So we're very specific on entry, which by default means we're very specific on exit, smaller exits, which means we have less stress, which means we have lower emotion, which means we think clearer. I have a degree in psychology also. I study it. I've seen it. I've lived through it. On the other sides of the coins, it just makes life easier. So that's that point. Here's the next question you ask. Great question here, sir. Do you ever hold through earnings? Yes, I do. If I have a good profit, and I don't mean 50 frickin' cents, I mean a good profit, I will hold some through earnings. However, there was an operative word in that statement, some. What have I done? I will take a good portion off before earnings. Only if I have a good profit, I will sell maybe 70, 80% and only keep 20%. Why? Because I have been on the other side of the equation where You get a gap down and you have a stock fall quite a bit, it really screws up your head, okay? It really does. So I don't do that. I don't do that. Let's do the next one. Do you enter trades with preset stop loss triggers? I don't have a preset stop loss trigger. I don't have a stop loss in it, but do I have a price point where the trade is bad and I know I'm going to get out? Yes. Let me see if I can give you an example here. Maybe we could do this. This one. Well, here, let's do this one right here. Let's suppose that we bought some more of this right here, which I think we did. You bought more of it right here. Watch this. You see Netflix? So I'd have a price alert set taking out those highs. If it takes out those highs with volume, I'm buying more. But here's what I do next. Automatically, I will put right there a price alert. And if it keeps pushing up, I will put the price alert right there. You see that line right there? What does that tell me? The good ones push up. They don't fall back down below the previous day's intraday high. This is the previous day's intraday high. So guess what I'm doing? I'll be taking some off because the best ones don't do that. They just push away, and that's what we want. How have you learned to avoid our limit getting into false breakouts? Great question. I'm going to ask this question again. Say it again. How have you learned to avoid our limit getting into false breakouts? First off, I will tell you this. Am I ever in false breakouts? Yes, I am. I've met, one person that never is, and their name's Liar. They're called Liar. The best people have false. Bill O'Neill has false breakouts. That's why he limits losses. So what have I learned to avoid? This is what I found. Focus on the really clean and simple longer basis that everybody sees. Why? Because it increases the odds that they will act on it also. The more people that act on it, the greater the likelihood that it is going to work for us. Some people say, I like to look for a pattern that nobody else sees. What? That's an ego thing. There's the ego. No, I want everybody to see it so we all act on it together. Next point. Do you have a list of simple rules to follow that tell you when to sit on cash? Yeah, I'll tell you what. Couple of rules. When I see a bunch of breakout stocks fail, it's a big red flag for me to pull in the horns. When I see a bunch of stocks falling, it is a big red flag for me to pull back and not do anything. When I see us falling below the 50-day that's falling or below the 200-day, it tells me to sit out or just do an inverse ETF. Do I ever have periods where I don't do anything? Oh yeah, I will have periods where I'll just sit and wait. There were periods there, you know what I used to do? I'd go on bike rides. I used to go mountain biking a lot. I just get out. I'm not going to sit here. Why? Because our computer screens can turn into video slot machines and cause us to suck into, look for something that's not there. So guess what? I stay away from it. I just stay away from it and I wait. I will wait until the market starts to turn. Now, I'll see the market start to turn in a couple of ways, and I'm going to wrap this video up. I know I went long, but I have to do this justice. I have to share this with you. How can you tell the market is turning? There's a couple of ways. Number one, you actually see one or two of the major ETF or indices starting to pick up. The S&P 500 or the NASDAQ. I'm not really that hung up on the Dow because that's only 30 stocks. That's easy to manipulate and maneuver. But there's something else I look for. I look for some breakouts that are starting to work. You'll see a couple that are starting to move. Maybe you're in them or you've seen a couple of them. It's like, it's safe for me to start treading back into the water. That's how I will run it. I hope this helps. I apologize that this is longer than normal, but I have to do it justice. This is not lip service. I used to go to the library and draw the frickin' charts by hand. There was nobody out there. There was no internet. There was no Investors Daily newspaper that I knew of at the time that I could find out how the heck. There weren't all the books that are out there now. And so I had to go in there and tear it apart myself. And how did I do it? I'd go to the library, I'd grab the Wall Street Journal, and I'd sit there and look for stocks that had moved up, and I'd get out my graph paper, and I'd draw the charts by hand. pretty soon I started to see recurring patterns. And I trained my eyes because I'll tell you what, you want to know a chart? Draw charts. By the way, I'm not telling you to do that, okay? But boy, do you really learn charts. Anyway, I hope this helps. Welcome to the team. I apologize this took so long, but you can see we're putting out a lot of material right now. And I thank you so much for being part of this team. I appreciate it. Thank you, sir.